Welcome to all of you coming on to another session of our format GDV Live. As you might know, my name is Jörg Asmussen. I'm the Managing Director of the German Insurance Industry Association, and I will, as always, guide you through today's discussion. Today we deal with sustainable insurance in the broadest sense. My role will be a quite limited one because we have chosen a new format at the kind of reverse panel, and we have someone else who will at least start to ask the questions. We have invited for that Paul Time. Paul is a well-known member of the European Parliament, and he's for sure known to most of our audience. He's been a member of the European Parliament for the Dutch Social Democrats since 2014. He's a member of the Econ Committee since 2019. He's also the chair of the subcommittee on tax matters, and he has played a very active role in most sustainability-related files in the European Parliament, like the financial disclosure regulation, the taxonomy regulation. And currently, he is very, very active in dealing with the green bond standard. Paul, we thank you very much for accepting our invitation to this kind of reverse panel. And it's up to you to ask the questions. And we have two persons who I'm very proud that they are here with us today to answer your question, Paul. It's Monica Koslin. Monica is the CEO of an insurance association that represents about 150 smaller mutual insurance companies in Germany. And she's CEO also of a reinsurance company. And we have Stefan Lehmann. He is now titled Chief Business Officer at Generali Germany, so he represents the German operations for a globally active insurance company, and both are members of our executive board. So thank you very much for the three of you that you have taken your time, 45 minutes as we normally do, to deal with this question. And after this very short and brief introduction, I would directly start the discussion, which I hope to be as interactive as possible. I suggest, Paul, I think it might be on your mind to deal with the green transition and the role that insurers play as major institutional investors.
Yeah, thank you, Jörg. And let me start there. And thank you for setting up this discussion. I very much like the framework of a reverse panel. One reason is that I'm a very curious guy, so I'd like to know more and more. And the second reason is that I think it's always been a great help, at least for the legislators in the European Parliament, to have discussions with representatives from the financial sector. I know there are also differences in the financial sector. I see front runners that help us to show the way. That really helps because they show the way what can be done or how it should be done. And at the same time, legislation is often not aimed at the front runners, but let's say at well, the average or the laggards among them. And that is crucial when you. I remember when I worked on the sustainable finance disclosure regulation. Much of there was encouragement from the large institutional investors to, for example, to embrace double materiality. But I also remember the resistance from, let's say, Eastern Europe, where financial institutions are relatively small and they find it very hard to cope with the demands we had on transparency, and that is. It's a good thing that I've worked on sustainable finance. I think from the moment it finally entered into the European debate, and I must say that I'm actually pleasantly surprised by the response we got. You see that ESG has become mainstream. That's what I hope, at least. So just to kick off the question, how do you see that for the two of you? And let's start with maybe with Stefan first, one of the large institutional investors. Is it mainstream, or is it also coming sometimes close to? Is it a real change, or is it sometimes also a form of greenwashing? Sounds a bit hard, but that's not what I. But is it more reputation that some of the corporates seem or financial institutions seem to do the words but not take the actions? How do you see that?
So thanks a lot for that question, Paul, and I will give it a start and also afterwards hand over to Monica. So first of all, thanks for also having me here in that discussion. Looking very much forward to that and to have an interactive discussion. So the insurance industry is convinced that we need to take it seriously. When we talk about climate change, it's one of the challenges which are ahead of us. And we mean it, and by we embed everything in our processes and even our strategy. So there was basically a rather slow start in the past, but on and on, insurers take it very seriously and act accordingly. It's basically our association, German Insurance Association, which is headed by Jörg, where we have a very clear positioning on sustainability. By the way, we have been the first organization being so clear and outspoken and committed ourselves to different targets. And also the industry, and I can speak for Generali, we have a governance alongside that. We set us targets and we mean it. Because at the end of the day, you need to be convinced intrinsically and not to go the way which you described as greenwashing. Because greenwashing, I mean, if you decide to go that path, there is, besides a cultural and strategy issue, you face reputational issues and so on and so forth. And my conviction and our conviction as an industry is that we mean it and we go down that road. And we have many examples. Take the asset side, where a good part of our 1.8 trillion investments we have in the German market are in the new business invested in climate-friendly assets. We would like to have more, but basically that's the real challenge. So just to give it a start, Monica, maybe I pass the ball over to you.
Sure. Not so much to add, but of course, sustainability and climate change risks become an issue more and more. Even for the small players, of course, the role they have is quite different to the ones Generali and other giants do have. But of course, the events we had in the last few months, looking at the NatCat claims, help or support to change thoughts everywhere. No matter whether it's a small company, a small insurer, small mutual, they try to do a change within their region as well by showing their members that they understand that we need to have a change quickly.
Both of you make it sound like it's almost self-evident that we go in that direction, but I imagine it's also a major change for the organization, and not just the organization, but also the culture. So can you tell us a bit more about the hard parts of this change? And let me take, for example, you can incorporate the discussions we are going to have or already having in the European Parliament, where we now have a discussion on investment in gas-powered electricity and on nuclear power. So there you see that's a very interesting discussion, which is where you show that also in the European Parliament, even though I think broadly speaking, the Parliament is very much in favor of this idea of sustainable finance, we still end up sometimes with very difficult discussions. David, please.
No, I mean, just to give it a start, basically, I mean, looking at insurers as an industry in Europe and in Germany, we have long-term liabilities on our liability side, and we have an asset side which should be matched best concerning duration. So, I mean, each and every decision we take, we need to have a long-term perspective. So you cannot transform basically easily from today to tomorrow your complete asset side, because it will be a mess, also from a client perspective. So the key point, Paul, for us is to have a clear strategy, to have a clear roadmap to go ahead. And we are investing each and every year billions newly in assets. And this process has been kicked off, and the industry has a pretty clear roadmap to invest in climate-friendly assets. I mean, of course, you made the point, what about gas? What about atomic energy? And frankly speaking, this is also a political discussion which is ongoing. And we as an industry have the freedom in our underwriting guidelines to define what we want. Because at the end, it's up to Generali, it's up to AXA, it's up to competitors to say, are we convinced to go down that roadmap, or do we have a different stance? I mean, that's the factual part, asset liabilities. When you speak about touching the heart of employees, so corporate culture, the soft part of the organization, basically it's a road. And you need to start that road, and you need to convince people step by step. Because you cannot say, today I invest in coal, and tomorrow the whole organization is convinced to do it differently.
Yeah, maybe I can add on that what Stefan just mentioned. Of course, we need to understand early the effects from this large asset rotation that will come up. And as a consequence, German insurers widely use various ESG concepts in risk management already and in their investment decision processes. So more than 80% of direct and indirect investments are managed with the help of ESG concepts. So we can see a strong exchange among our members in the industry via GDV, as well as through voluntary initiatives such as the Principles for Responsible Investment or Asset Owner Alliance. And regarding our employees, of course, you can imagine a small company like the one I'm representing, or the ones I'm representing, is a fairly different way, because you can talk to everyone out of the company. You can ask them, how do you come here? Do you get here by bike? Do you get here by car? They will answer. It's not like a big unity that has to make kind of surveys and has to keep in mind that the employees might not answer the question. So it's a fairly different cultural thing that we do have in small entities.
You know, maybe Paul, just one more point, which really strikes me from, how should I say, from a business perspective. And this is regulation. So, I mean, regulation follow certain targets. So, I mean, we as insurers, we want to invest by far more in climate neutral assets, but we need to have a very clear and predictable framework. I mean, same as Solvency II. So the IOPA update, which is currently being discussed. Once we have a clear framework, which is predictable, we can invest even more in private-public partnerships, and we can basically help to back up European economy again after COVID. And this is one of the crucial points, that we have a clear and predictable and sizable regulation framework. And I'm not sure if everything is going that way.
No, I'm not sure either. But before I go there, Stefan, because I think that's interesting. But on the change in the companies, it's a different mindset. You become a more, let's say, active player in society and take a position on some of the issues where you were not required to take a position before. I'm just wondering, does that lead to fierce discussion inside the companies? Is that your experience, or is it, for example, how people travel to their work? I understand that's one of the issues that comes to mind. But also, for example, let's take the specific example on gas and nuclear. Is that a heated debate, or is it a wait and see attitude, what the political decision will be? Or I can imagine that it's discussed in Brussels, it's discussed in Berlin, but is it also discussed at the desk in your offices?
No, I mean, basically it is a discussion. It's also an intense discussion, and it's good to have it as an intense discussion, because you really can exchange views and also different perspectives. I mean, for Generali, it's a rather easy one because we have a very clear stance on that. And like most players in the industry, but the key point is that I think currently people ask for purpose. So the why do we do? So why should we work for insurers? Yeah. And I mean, when it's linked to sustainability, to taxonomy, to purpose, you really need to be clear and have a vision. And this is the discussion which is ongoing. And so I like a lot that we have intense discussion alongside all topics concerning taxonomy and so on and so forth.
And Monica, what happens with you when we're discussing gas or nuclear?
Of course, we do have different views on that among my employees as well. But we are not the EU member state, so it's not that heavy that it might be in the discussions you have. But then, like we heard before, of course, it helps to rethink or to ask questions behind decisions we do have. Of course, we don't have to do nuclear decisions here in Kiel, but still all the small things that support our main goal to make a change within the sustainability steps. It helps to discuss with everyone here. So it's only 10 people here, but of course to listen to every single argument why we could rethink our little steps in participating in this change.
Okay. And coming back to your remark, Stefan, I appreciate the point that you need a predictable framework that allows you to make long-run investment decisions, portfolio investment decisions. Of course, but the political life is it's not structured like that, I would say, right? And I remember, of course, when we started in 2018 and we started with sustainable finance, we, at least the parliamentarians I was discussing this with, were very much aware that what we were trying to do for the financial sector need to have an equivalent approach in the corporate sector. For example, if we want transparency on investment, well, you need the data on corporates, right? But it's not that we first thought of a blueprint and then rules out the blueprint. No, there was political momentum to address the issue of sustainable finance. But we were very much aware that it would need to, sustainable corporate governance for the corporates. And I don't know always how to, because it's not like you think of a blueprint, you sit down, think of a blueprint and roll it out. I'm not always sure how to improve upon this process, really. I wish I had a very clear answer on that. But it is also the reason why I personally very much like to see an important role also for supervisors. So there is legislation, primary legislation that sort of guides the way, but the exact path you take very much also depends on the interaction between the financial institutions and the supervisors, because that's I very much hope an ongoing conversation. And if you travel the road and you're unsure which turn to take, well, then that may very well help. So in that sense, I'm downplaying the role of primary legislation, but also see an important role for supervisors to guide us in that direction. Like I said, this is not a perfect answer. I realize that, but that's sort of my my somewhat inept response to your remark. But I'm wondering, how do you see that? Do you often complain about what happened in Brussels or in Berlin or what else?
So, I'm not against regulation. I'm a fan of a strong regulator who has a clear focus and priorities, and takes care about the real issues. So just 2 points which maybe make it concrete, because it's, or 3 points which make it concrete. First, it's about proportionality. So I think there shouldn't be a one-fits-all approach. So I mean, take Monica representing a small company, take Generali representing the biggest insurance company in Europe. So the question is, when we talk about Solvency II update, do we really have balance on proportionality? So first point, because the related point is immediately reporting. So building up capacities for reporting. Is there really a value added in day-by-day life for investors, for capital markets, for supervision coming from these reportings? Question mark. So just as a very concrete example. Second point, it's basically everything about sustainability reporting. So I think we started rather lean, but the last report drafts that I saw have been extended a lot, like the SFCR reporting in Germany, which is basically kind of a Solvency II reporting. So my take is that the original intention is always a good one, because you need to provide focused information. But then probably it's what you described, that there is a process of finding consensus, and everybody tries to put in something on top, and that makes it rather difficult. So just very, very concrete examples. But I do think that regulation is important, but should have a focused approach.
I see your point. Can I ask a question on data? Because I think transparency is important to make investment decisions, but also to make sure that that there's trust established. Transparency and trust. Transparency is a condition for trust. Trust in the market. Yet, this is an unfinished idea, so to say. So it's not in. But what I see, of course, is there's a lot of data around, but that data also has the character of public good, and you see more and more private companies trying to get the data and sell the data. Is that, for example, I remember that Refinitiv has been bought by the London Stock Exchange, just showing how important data on sustainability become. And I was just wondering, we need good access to data. Should it be, is the provision of this data, the supply of these data by private entities, is that the way forward, or should we sometimes have a more emphasize the public good character? Data should be easily accessible. Sorry, this is not just an unfinished idea, so if I'm talking rubbish, please say so. But do you see the point that because the data on sustainability becomes so important, I see markets develop, and I'm not sure this is sometimes the best way forward. It might become crucial to have this data, and are we building new, positions of monopoly power? Okay, so I'm happy to hear your thoughts on that, how you see the market for data develop.
Maybe I can draw back a question on that, because in my point of view, introducing a European single access point can be the game changer, and will bring transparency for all of us, and would help to prevent having all these companies coming out of their holes and making big invoices to get their services paid. So maybe this would be the right move, and Commission's proposal from November, I think, is absolutely welcome, but we need to have a clear roadmap how this will be installed, how this could be driven to work, to assure that the things we need out of ESAP will help us in our daily business, and not only us, all the stakeholders, reporting companies as well as investors, I think that would be the right move.
Okay. Yeah, I had a similar thought that the single access point might be a crucial part of the, let's say, the infrastructure that we need to for ESG investment. But I sort of, maybe I learned to appreciate more about the importance of data and access to data, and maybe so I'm glad to hear that, to have this reply from you, because it just sort of confirms my intuition that we should pay good attention to the single access point. I think might be a crucial bit of the infrastructure. All right. I have to look at the time, Jürgen, and how do we go?
We have still a little bit less than 20 minutes left agreed to the agreed schedule. So you can continue with whatever topic you like. We can stay with the investment side. We can go with what we insure. You just touched upon the, for us, really key issue of data.
Yeah.
Why don't we spend a bit of a time, because you are at the very core of what happens here in Brussels, on the EU Green Bond Standard?
Yeah,
as
okay.
Stefan said, we would like to invest more, let's say, in green bonds. We are talking now about the German market mainly, where the demand for whatever you label green bonds, especially from the sovereign, is much lower than the supply. So the question is, how can we reliably increase the supply of green assets without immediately falling into the trap of greenwashing? But you are at the core of how to do this.
Yeah, okay, let's take that question. I also ask if you want to raise a point and we have 20 minutes less, then please don't hesitate to do so. And of course, and I started this morning with the first meeting of the EP team, the European Parliament team on the green bonds. And there will be some political discussions, but we started relatively easy this morning, not to start in the difficult, but to get started. So I choose the part we more agree upon. But there will be some difficult discussions. One of the discussions is should it be voluntary or should it be mandatory in the longer run? So I'm happy to hear from you. But generally, I ask myself, and I also ask many others, what will make the EU Green Bond Standard a success? Because that's what we need. Right? What is it that will make it a success? Because there's a sometimes difficult trade-off, but that it needs to be trusted. And on the one hand, and it needs to be, well, let's say, easy. On the other hand, so to say, well, and that's the balance we need to strike. And I always wonder, what do you think is crucial to make the Green Bond Standard a success? Because that's what we have in common in the European Parliament, and I think also we want to make it a success, but what is the best way forward? So I'm happy to hear your thoughts on that.
So maybe I give it a start. I think the key point, Paul, is to have reliability, and it needs to be predictable. I mean, being a big asset manager, I cannot go this way, this time that way, and then next week a different way. So I always need to think my business from the liability side, because we have the liabilities of our clients and policyholders. So 2 or 3 concrete points. First, we understand we support as German industry. Second point, there should be a grandfathering for bonds that have been, let's say, released in the past. So, I mean, switching an existing bond to somewhat green is difficult. So there should be a grandfathering for the past. And maybe a third point, the proceedings coming from those bonds, I need to have flexibility where to invest. So, I mean, if it's like when I have a coupon coming from a bond, I need to link it to a certain investment, basically that takes away asset management flexibility. And it should be voluntarily for me as a convinced asset manager. to have the freedom of choice of investment. And as said, the German industry is exactly on that way. And we want to invest if we have the opportunities to invest. But predictability and a certain level of flexibility is key for me, because you need to have a buy-in of the industry. And the question now is how to create that buy-in.
And can you expand on that a bit more, because there you need a buy-in. I see now that the greenium, so the interest rate advantage is probably very small in an era of, let's say, cheap money. So what is the buy-in, apart from, I understand your point on being flexible and predictable?
So, I mean, we as Generali issued a green bond. I think it was 2 years ago, because we are convinced by that strategy, and we think sustainably, and we want to go ahead, want to be a front runner, because that's part of our DNA, and we are convinced to go that way. So you have our buy-in, because we have that flexibility in investing that way. But as I explained beforehand, this is a strategic path and a strategic in-house decision of basically each and every insurance group. Are they convinced to go down that way? And when they are convinced, they will probably more invest in green bonds. So once we have a clear framework, the content flexibility, then I'm convinced that a major part of the 1.8 trillion investments which we have in our portfolio will go down that road and basically help the political agenda to become green. So there needs to be that buy-in, because at the end it's industry and it's political Brussels, it's political Berlin, which need to go in the same way. And therefore the regulation needs to support that. Same for Solvency II. If we now need to put billions more money in our risk models, this is money which I cannot invest basically in the change of the economy, just to be very practical.
Monica, you have a bit more diverse partners, so to say.
Yeah, so of course, my issue is fairly different to that, but on the long run, it's the same story. I mean, we need clear regulation or clear requirements set up with a flexibility, as Stefan just mentioned, to help market participants to whatever they did so far is not going to change. As you know, we are long-term investors and stuff like that. So we need clear points that we can rely on. And I mean, it's the same with the taxonomy as well as the green bond standard. Of course, as soon or the sooner we do have clear scope, clear transparency and comparability, it'll lead to legal certainty, and therefore it will help investors to do their invests in the right direction, going green.
But how do you see the take up, the buy-in from, especially for smaller insurance? It might be an investment to have a green bond designed.
Well, it's not like I can. Sorry.
Yeah, please go ahead. It's
not like I can talk about a long time of experience in that case, but I think it's a question of barriers, and that's the point. It starts with what amount do you have to put in there, how transparent is the bond, so people understand what's going on there, because like we heard before, talking about the employees, of course you can imagine small insurers, they do not have a asset management department with 30 people that are all very much into the different asset classes, so that'll help.
Okay.
You know, Paul, I think that the buy-in will also be triggered by investors and by capital markets. So when we have discussions with investors, they are questioning exactly that. So what about your portfolio? What is your investment strategy? Do you take it seriously? So I think there's also kind of a positive pressure coming from capital markets. And I personally do believe in market. I'm not a big fan of an overwhelming regulation. Focused one is fine. But at the end, it needs to be the decision of each and every company to go down that road. Yeah. And I think that most companies are pretty good on their way to go that road.
Okay. Yeah. I'm still wondering about the smaller institutions, I get your message. Like I said, we want to make it a success, so it should be it should not just be applied to the larger institutions, but in the end also become accessible to the smaller institution. May take some time because it requires investment, but okay, that's what we aim for.
But still,
yep.
maybe if I may interrupt you.
Sure.
You need to see that the ones I'm representing, mutuals, of course, they do have a difference because investors cannot go in there. So that's a different point of view as well. We need to keep that in or bear that in mind. And as well, I think it would help for most of them, they're in their region, working only in their region, and that they give good examples within their region. And they do that by supporting renewable energy projects. And I think the politic would help us a lot if they give us more opportunities to invest in those things, because that makes a move.
I need to unmute myself, and that is more that the risk taking under solvency is sometimes restricted, right? Is that what the point then is? Just from my understanding.
So it's not basically restricted. It's the overall amount which you need to put on top in the risk models. So
yeah, sure.
It's basically, I don't want to be too technical. It's pillar one, which is currently under discussion.
Yeah, I see. Turning to risk, because I'm just curious to hear from you, because you have risk on the asset side and on the liability side when it comes to climate change. As an outsider of the insurance, that sounds a bit uncomfortable to say, to have risks on both sides of your balance sheet. And I remember also, but I'm not sure how it is in the insurance industry. I also remember that I saw let's say a bad weather scenario by the ECB, which showed that some of the risks are very concentrated with some of the banks. Though it's different in Southern Europe, where you have the problem of wildfires, but some banks have had concentrated risk because of climate change policies or high investment, let's say, in fossil fuel industry. So there are different types of risk. How do you see that? And of course, it's not in the case in your companies that you have been able to deal with all those risks absolutely fine. But do you see examples in the insurance industry that worry you or not, when it comes to the risks for these insurance companies, especially pertaining from climate change?
So basically, we have the asset side and we have the liability side.
Yeah.
Liability side is basically the underwriting, where you underwrite the liability towards clients. And just speaking P&C, and Monica can do far better than I can. Just look at the floods which we had last year in Europe, especially in Germany. And here you need to have, as a company, a reasonable positioning, whether you should build houses and infrastructure in areas which are frequently flooded. So this is a concrete example where you need to make up your mind. You have certain areas where, with a certain profitability, you cannot underwrite business. I mean, this is a concrete example for the liability side. For the asset side, you need to have a stance on your strategic asset allocation, whether you want to have assets like coal or green wind energy turbines as part of your portfolio. So Monica, maybe you can add on the underwriting side.
Yeah, maybe, especially if it comes to the flood. I think there's no fear. Also, already at the beginning of 21, so before the floods disaster, we approached politicians and the public very clearly and campaigned for an implementation of climate change adaptation measures in the building and land use planning regulations. The corresponding article you can find on our website as well, and Jörg might get on that later on. Our conclusion at the time, in Germany, around 2.5 million new residential buildings have been built in the past 20 years, more than 30,000 of them in areas with a high risk of flooding. So this shows that the current building and land use planning regulations have hardly reacted to the knowledge gained from climate impact research. So in July 21, when the extreme weather event Bernd happened, most politicians talked solely about compulsory insurance, nat cat insurance as the ultimate solution, but we missed discussions on prevention or even changing the building and land use planning regulations. An insurance policy does not save a single life, nor does it prevent any losses, but prevention, however, does. And against this background, we published a second position paper on natural hazard insurance, which we incorporated into the political process with the following key messages: that the German insurance, of course, is ready. We have no experience that even more homeowners insured would have lead to a problem in the insurance capacity. So we don't have fear. We just need the support and the match from political necessities to be done, as well as our improvements for our members or policyholders.
And are politicians listening this time? Because you said climate adaptation is important. They didn't listen.
Well,
will they listen this time?
The discussion has just begun. And of course, as you can imagine, with the German situation at the moment, it'll take a while until we talk about these subjects. But of course, we hope, and I'm sure Jörg makes good moves to get them to talk about that, because we don't want to have the same situation we had years before, after 2013 with the Elbe flood. And yeah, it was discussed back then, but then it was lost at some point in time again. But this time, maybe it was heavy enough. We'll see.
But it must be frustrating, right? A bit, at least.
Yes. But Paul, I think politics in general, you need a high level of frustration. Otherwise, you do something. Okay. Irrespective on which side of the table you are.
Okay. No, but it put, let's say, let me use the word climate adaptation more on the agenda, right? The floods in Belgium and Germany, we're going to deal with, because freak weather incidents will happen more and more and more. That's likely, at least. And indeed, you can't stop that from happening, but you have to find ways to deal with these events. This should be on the agenda, and I imagine that indeed insurance can help a great deal with that. That's what I hope, at least.
Yes, and we have to deal with these things, but we should have enough time to take care of all these thoughts and not be forced to do too much regulation on the other side, which, especially in my case, talking for the smaller ones, has a lack of capacity in the employee situation.
Yeah. Okay.
And we are at hand to ensure those risks. So we want to do. Where we are rather critical is a state solution, where the state basically says you need to, or we do, because at the end it's about market price and it's about to find a real fair price for the risk that we underwrite.
Okay. But could you, but I understand, I hear what you say, but just still a question on this, because could it occur that the problems, that the events are too big to insure? Is that, or is it? that you need some public insurance or assurance to indeed to insure private homeowners or what. Could that happen, a situation, or do you don't fear that? Do you understand my question? Sometimes if it's too big to insure, what then? But unless you say it's not too big.
Maybe I do this quickly
Please.
for all of us. I mean, we assume that natural disaster can be insured by private insurance companies. That is different to pandemic and a bit different to terror risks. For terror risk in Germany, you have a kind of public-private partnership.
Yeah.
We would suggest the same for dealing with a pandemic, but natural disaster, we would say, can be insured by private markets. To answer your question.
Yeah, fine. That's what I was looking for. Okay, good to know.
So, I'm very well aware of the time the three of you have important business to do. So I think that was lively, that was interactive. Paul, I very much thank you for accepting our invitation. I think it was the first one for you on the GDV Live format. Yeah. We hope to see you again because you're one of the key figures in the European Parliament when it comes to sustainability questions. So I hope you enjoyed it so much that we can re-invite you
absolutely
later
I enjoyed it.
In the course of the year. I very much liked your statement when Stefan was asking for reliability. You very frankly said political life is not structured like this. So I enjoyed that openness, and I very much can agree. So thanks to you, Paul, for doing this innovation with us. And I would very much like to thank Monica and Stefan that they again have worked on behalf of the whole association. So thank you very much to the three of you. Thank you very much to my team at the GDV for setting this up. And of course, the greatest thanks go to all our audience for watching this discussion. And I hope to see all of you soon back on the GDV Live event. Thank you very much.
Thank you. Much appreciated.
Thanks a lot.
Thanks.
Bye-bye.
Bye, everyone.